Well, brokerages like Jefferies have 15,800 targets on the Nifty, but Bank of America are a lot more conservative at 15,000. In fact, they believe that Nifty is almost priced to perfection, and they forecast just a 7 to 8% upside for Nifty from here. They say when it gets there, 15,000, Nifty will be trading in excess of 2 standard deviations of its long-term averages, right? So that means that it's a very delicate scenario, and that any negative news flow, macroeconomic data, or a weak set of earnings from any of the Nifty companies which are due to report in the coming weeks could significantly hamper the overall Nifty index valuation. Now, there's some factors to look at, though, which are neutral to positive for markets, like central banks are going to continue monetary easing. That is going to lead to lower interest rates persisting for longer. It's also going to lead to a weaker dollar, which is becoming more apparent. Today, the rupee is the highest it's ever been in the last 6 months against the dollar, right? So since September 2020 till now, we've gained very smartly on the dollar, and that's of course been good for our emerging markets, and these trends are likely to continue. However, on the flip side, we have the union budget coming up, we have the state elections coming up, right? Like I said, we have earnings coming up and a very high valuation compared to historic trends. So if the earnings miss, or for example, another big trigger is the vaccine. So right now, mass rollout of vaccine and distribution is being priced in. If there are any delays there that lead to perhaps reinitiated lockdowns or further constraints caused by the virus, of course, again, those are also downside risks. So budget, state elections, COVID resurgence, vaccine delay, all these are factors that are also very important in Bank of America's view. Now that we've told you the landscape and what it's like, neutral to positive as of now, their overweight stance remains with financial. So the top tier private banks, they love an ICICI Bank, they like an Axis Bank, they like HDFC Bank, and they also like HDFC Limited. They're also overweight on industrials, materials, staples, and then of course pharma, right? So LT, ADSEZ, TATA, Ultratech Cement, Hindustan Unilever, ITC, Dr. Reddy's, Bharti, they're all positive on these index heavyweights, and they believe that you should remain overweight on these mentioned stocks. However, on the flip, underweight on IT, auto, and consumer discretionary and energy. Now, that's quite a contrary trade because everyone on the street is quite bullish on IT and auto both. So they don't really have an affinity for a TCS or a Wipro. They don't even have an affinity for a smaller mid-cap IT stock like an LTTS, right? They believe that the valuations have run up to perhaps stretch levels. They are also cautious on an MSIL, a TTMT, a Bajaj Auto, an HMCL, a TVSL, a BHFC, an EIM, a Titan. So across consumer discretionary, autos, IT and energy, you're getting a little more of a cautious undertone from Bank of America. So that's their current stance. Of course, if you just want to look at the benchmark, we're at 14,000 today, 15,000 is still a good 7 to 8% away upside. So you could play for that.